What's up, guys? It's Rey-Jay back with another video. And in this one, I want to break down what's happening with the overall market and talk about potential targets for this pullback that's about to start. Just know that I am not a financial planner, so take nothing I'm saying as financial advice. Anyways, as you guys know, for the last couple of weeks, I've been making videos about how there's going to be a pullback starting in August. And as you guys can tell, the charts are showing weakness given what's going on with some earnings. We saw Amazon sell off quite a bit, and also because of Jerome Powell. So when it comes to Jerome Powell and the Fed, okay, they made it very, very clear that they can't just cut rates like that. They have to wait and see what happens with a lot of data. And this is not what the market wanted to hear. The market was pricing in rate cuts for September, and now there's a lot of uncertainty due to the tariffs and the risks that the Fed is facing. The Fed mentioned that the tariffs are one of the reasons, and they have to wait and see what happens with the economic data. They have to wait and see what happens with their dual mandate, which is going to be greatly affected by the employment numbers alongside inflationary data. The Fed also mentioned that they can't make promises and that we should be grateful that they're not necessarily raising rates, even if they could. So Jerome Powell is just telling us that, look, the Fed has to do what's necessary. They're not really planning on cutting until they see what the data looks like. And that caused the market to dip quite a bit on FOMC. Now, with that being said, the data that's coming out is going to greatly affect how this market moves. And other factors include the tariffs. So, as you guys know, President Trump has imposed tariffs on lots of countries. South Korea has a 15% tariff. Some countries have not too high tariffs as they made some deals from like the European Union, Japan, the Philippines, and etc. But other regions like India and other countries like Canada are going to be subjected to higher tariffs alongside components from steel to aluminum, copper, and then the list goes on all these different products. So that's going to be another factor affecting this market alongside our economic data. So, what does this mean moving forward, and why do I think the market's going to likely pull back? Well, I've been using a very, very awesome tool known as Forecaster to help you guys understand what tends to happen with the charts when it comes to seasonality and such. And so far, they're doing a fantastic job at showing us what's about to happen in this market when you look at previous trends and correlations. And if you guys want to sign up, you could save 10% by using my code down below. Anyways, I want to talk about Forecaster and break down what this is telling us for the S&P 500 and QQQ, because I think there's something really big happening, and whatever happens is going to be very, very important for the future. So one thing that's worth mentioning is that when you look at the historical trend of the markets, the current year has a 94.07% correlation with last year and a 92.22% correlation with the last 5 years, telling us that as we get to this August/September period, we do tend to sell off. That is what typically happens. Also, there's a very, very evident trend that happens after election years. Historically, by August, we do tend to see a sell off, and we're already there. Now, one thing that's very interesting is if you guys are interested in looking at what politicians are doing, when you look at the QQQ, politicians have been selling into this rally since Q2 started. They've been selling, selling, selling ever since we saw the market in QQQ rally. And it's almost as if they may have known something. I'm not going to put that out there when it comes to conspiracies, but I'm just trying to say that this could be very, very useful to understand what on earth others are doing. And if you're interested in finding out, this is a very, very useful tool for that. So what does the market suggest? Well, we are going to likely see some kind of pullback in August. And I will talk about our price targets for that in just a minute. But keep in mind, when you look at our seasonality and monthly averages, the market tends to show some weakness in August, and we tend to see a lot of weakness in September during that period. And then we tend to form a bottom closer to October before we start bouncing. So keep that in mind. That's what seasonality suggests. Now, the market was very overbought, and now it's becoming more neutral as we're already starting to sell off. And then if this sells off more, we could be getting a sell signal on our DPO. We're very close to that. And that could be another sign that the market is once again going to slow down. Looking at the market mood, we came very close to this extreme level. This is when we tend to hit a lot of greed. And now this is also slowing down right now. So keep that in mind. That's going to be very, very useful. For other things affecting us, keep in mind when you look at the overview of this market, we've been very, very strong. We're very, very strong. We're still up quite a bit for the last 5 years, the year overall. This year, we're still up 10% on the QQQ, so some kind of pullback is no surprise. And if you look at other tickers out there, if you look at like NVIDIA, for example, it's also been just like pumping and pumping and pumping. It has very high net income, but keep in mind that despite how well it's doing, I just wanted to make it very clear that we're seeing an interesting trend right now. We're seeing a lot of important figures like Jensen Huang, for example, who are selling some shares, and they've been doing this for the last couple of days. Could it mean that they know something? We'll see about that. We were very close to overbought, and we started to see a lot of key figures selling their shares up here. So that's a sign that Nvidia could be looking for a bit of a pullback, especially as we start to get more sell ratings. So that's going to be very, very interesting for our analysis. And then when it comes to other factors out there, we could also look at other things like news and such. But if you're interested in looking at their like PE ratio and such, I think this is a very, very awesome tool for that. So, anyways, what do I think the market's going to do based off all this data and based off what forecasters telling us? Well, one thing that's worth mentioning is that you have to look at the previous trends, right? We have a very high correlation with the last couple of years. And if you go back, you guys could see that if we go back to like last year in 2024, as we got towards that August period, we did see the market sell off quite a bit. SPY went from this 563 area all the way down towards 512. So that was quite a bit of a dip. And that's very, very important as the market saw a bit of a sell off. So that's very, very important news as well. So you guys can see how that ended up happening. Right here, if you look at the price range, you can actually see how much we dropped. We dropped about 10% at one point in August of last year. And then if we go back to 2023, we got a big pullback phase again. So for example, instead of just dropping 10%, we actually dropped more. The first drop was 5%, then we bounced. But then ultimately by September, we reached 8% in the red, bounced a bit. And then by October, we saw this thing bottom at almost 11% in the red. So the market dropped 11% in 2023 between August and October. And then if we go back to 2022, that's when the Fed was once again raising rates. From August, we went from 430 and we dumped all the way down almost 20%. So we typically drop between 10 and 20% between August and October. That happened 3 years in a row, and so far we're showing the same trend. Now, I can't make promises we dump that hard as the market once again has reason to not be that bearish, but I'm going to actually close out my lines just so that you guys can see this more clearly. This is what I'm essentially targeting, okay? On the daily time frame, keep in mind we have a lot of gaps. There's a gap all the way down here around the 600 area. I do think we're going to be dipping to at least that level. That would take us all the way down to at least a 6% pullback. But if it's worse than that, there's also another giant gap down here around 566. If we see a big amount of panic in the markets, if something happens from the all-time high, then we could be looking for a move all the way down towards 11% in the red. That would be an 11% move down. So are we about to drop like 6% or 11%? Our target is going to basically be at least 600. I think there's a good chance we reach 600. Typically, when the market drops, we end up dropping in August, and then sometimes by September we end up forming our bottom. Sometimes it's in October. But if we keep dropping and we don't hold this support right here around like the 592 area, I would be very, very open towards this gap support at 576 and the gap fill all the way down here. Those could be potential targets, at least for SPY, when it comes to how low we're going to go. But I do think we could be dipping to at least 600 by the time we get closer to September. So we're just starting this pullback. We're going to see if we could bounce a little bit before we continue to dump. And if we can't hold 625, we're looking for essentially 612. Maybe we consolidate from there. But then as time goes on, we're going to see if we bottom around here at this 600 area. If not, I'm looking for this support over here around like 592. And then that's also resistance becoming support right here. So that's like 594 to 592. We're going to likely bottom between 592 to 600. And then we're going to see if we bounce from there. But if we don't bottom there, if something really bad happens, maybe the inflation numbers are really high, whatever the factor is, then I would not rule out 566. So those are going to be our potential bottoms. Either it's 566 or maybe even like 600. But then once we get to like the October period, what forecasters and many other indicators tell us is that there's a very, very good chance that seasonality is going to take place. So if you look at seasonality, even if we do dump by like October, we do tend to rally towards the end of the year. And there's currently a 92% correlation between now and the last 5 years, and also a 94% correlation between now and last year. So there's a good chance that we do tend to turn bullish during those periods. And then keep in mind, the end of the year tends to be more bullish. So even if we do dump, there could be a very, very big V-shaped move by the time we get to October, and then we could just continue to rally back up. So that's what I'm essentially seeing. So I think that 600 is a very reasonable target for SPY, but it might be conservative. It's possible we drop to at least 592, and then maybe even this gap fill down here, right? We know there's going to likely be a pullback move. The last 3 years, we dropped between 10 and 20% between August and September. That happened 3 years in a row. And so far, the trend is continuing as August/September tends to be a very, very volatile and bearish period historically. Even during an election year, the market came down, which goes to show how powerful these signals tend to be. So, with that being said, guys, those are my targets. In case you guys were curious, I think there's a good chance we do see a substantial pullback, and I'm just here to give you guys an unbiased analysis. We could dip even more if we continue to dump, and it depends on the news and what we look like in real time. So I can't say we're going to dump to like 560 yet. I need to see how we end up reacting to 600 first. You got to take it one step at a time. You need to see A before B, and we have to give it the time it needs. So in case you're interested on looking at the market from a different perspective and looking at seasonality and these very, very useful tools to see what politicians and insiders are doing, if you want to look at NVIDIA's numbers, their PE ratio, what's happening with their net income, and all these very, very awesome metrics. And then if you want to see what happens with politicians, I think that could be very, very useful. You guys can check out my links down below to sign up for Forecaster. It's a very, very awesome platform to do this. I love to promote it because it's just absolutely fantastic. I would not promote a tool unless it has so many good features, so many good metrics, and I think that's the benefit of using this tool. So by using the tool, I was saying that was giving us a lot of confluence that there's going to likely be a very, very big pullback in August/September, based off what we were seeing from historical trends and based off what Forecaster was telling us. And as you guys could tell, it's working out. It's working out very, very well. Another thing is SPY has a triple bearish divergence, so that's also going to help favor the downwards direction to come down to start filling a lot of these gaps, okay? So I'm not here to be a perma bear or to scare you guys. I'm just trying to be 100% honest about this. When it comes to the QQQ, it's the same thing. We're going to close out these drawings. There's a giant gap here all the way down around the 530s. So if we go from the high, the 530 area is actually only about a 7% move down. Typically, the QQQ is a bit more volatile than SPY. So even if this dips a bit, I do think that by August, we should be looking for at least 531, maybe even lower. There's another gap down here around 509. I think we have another giant one over here around 490. Those are going to be our potential targets for a bottom. I believe that's where we're going to see a big support. So I do think we could be coming down to fill this gap at 531, or maybe we could be dipping all the way down towards 490, depending on how low we go, depending on the tariffs and factors like that, inflationary data and such. So we'll see. But even if we do dump all the way down here by September, I do believe that by the time we approach the end of the year, we're going to see a big recovery move. So keep that in mind. This is what the chart's going to likely look like. We should bottom either at 531 or all the way down towards closer to like 490 in case that doesn't hold. So keep that in mind for the QQQ. And then for ES, same thing. There's a giant gap down here at 5680. There's also a gap over here on SPX at 6,000. So we have a lot of gaps to fill on SPX. ES, it has a gap down here in the same level at the 5400s. There's a gap here at 5750. There's a lot of gaps, so I do think ES will start to fill some of these gaps. And it's going to at least visit our 200 EMA around 5972. I think there's a good chance for that. NQ also has a lot of gaps. Strong correlation with the QQQ. There's this level to watch for at 22,100, and there's also these gaps at 20,300. Like I said, guys, the market is so high that we are due for some kind of pullback move. And it's very, very good to look at confluences, look at different trends, look at tools like Forecaster to check those out. And then once we get that pullback move, it's going to be another buying opportunity. But I'm just giving you guys my targets for where I think the market's going to be going, okay? With that being said, guys, we'll see how well the market holds up. We're going to take it one day at a time. I'm not just going to call a massive dump to happen overnight or anything like that. It's going to take time, but I just want to give you guys a heads up about this. I make these videos to give you guys very honest assessments and warnings. So I thank you for listening. So please have a great rest of your guys' days. Enjoy your guys' weekends, and I'll be back very soon with another update. Thank you for listening, and peace out.